Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the trading week of April or May 22nd through May 26th, where we'll try to help you make money trading and protect your capital, whether there's a debt ceiling deal or no deal. So again, we'll talk about all the gyrations with the debt ceiling deal, whether there's a deal, no deal, when there's going to be a deal, and again, how you can make money trading and preserve your capital, whether there's a debt ceiling deal or no deal. So let's get started. So here's our Google document with our notes for part one of our weekly trading game plan for this week of May 22nd through May 26th. These Google documents with our notes are publicly accessible. You can find a link directly to this Google document in the description box below. We store all the Google documents with our notes for our weekly trading game plans in a publicly accessible Google Drive folder, and you can find a link to that folder in the description box below as well, so you can refer back to these notes as well as notes from our previous weekly trading game plans. And our weekly trading game plan notes contain links to all the tools we use, bonus videos, etc. And again, you can refer back to our trade idea strategies, etc. in these notes. Welcome, Tony Roses, Easy Mike. Thank you for joining us in the chat today. Glad to see you all. So we'll get started talking about how do we make money trading, whether there's a debt ceiling deal or no deal. So we'll start in FinViz. And I wanted to show you all a new feature they just recently released in FinViz. They're now offering a dark mode, so you can toggle between a light or dark mode. You can see the little moon or the little sun. I'm not completely sure which one I prefer yet, so I do like the dark mode on the home page. So I'd love y'all's feedback as to which you prefer for the videos, for the live streams, be it light mode or dark mode in FinViz. So again, love your feedback. Let me know which you prefer for our videos, and we'll adjust accordingly. For now, I kind of like the dark mode on the home page, so we'll kind of start out there and see how everyone likes it. And Tony Rosa says dark mode, likes dark mode. Good. And welcome Krastis Krumov, Alan Krantz. Thank you also for joining us. So we see Friday the markets had started out positive, and then we had the Powell press conference or Powell speech around 11 a.m. And then also we got news that one of the Republican representatives had walked out on the debt ceiling deal negotiations, and you see that caused all the markets to pretty much turn negative for the rest of the day. Pretty flat. So again, as we'll talk about in our strategies, the impact of this debt ceiling deal or no deal in these oscillations is going to have a impact on the markets as these news items come out. So again, we saw both the Powell speech and that news on the debt ceiling and negotiations breaking down on Friday caused all the markets to go negative, and they pretty much ended negative for the day. We see we got 40% advancing, 60% declining. Got a pretty 60-40, made new highs versus new lows. We got a little less than 50%, 47% above their 50-day, and 53% below, and 40% above their 200-day, and about 60% below. And you can see it was a pretty much 50-50 split on bullish versus bearish. We see all the FANG stocks, the mega cap tech stocks, either flat or negative. Nvidia got hit. Tesla happened to be positive. We saw some retail, Nike, Foot Locker, etc. had bad earnings, bad guidance, and were pretty negative. Healthcare seemed to be somewhat positive energy, and again, we'll see this when we look at the groups and industries as well. News items, again, a lot of it's going to be on the debt ceiling negotiations. We see Biden's at G7. He's supposed to come back on Sunday. So again, we're going to get news all through the weekend, whether there's a debt ceiling deal is on or off or what. And again, a lot of oscillations. And I expect, again, we'll talk about in the strategy section, but I expect, a pretty dramatic reaction come Monday as to where this stands either way. You can see there's an article about how you can profit and protect your portfolios if a debt ceiling fight unleashes market chaos. So you can read that. I've read that one. Again, doom scenarios, debt ceiling talks break down. So again, that's what triggered that downturn in the market right around 11 o'clock. We saw crude oil, WTI, was up around 72, is down now a little under 72. We'll look at that in the futures. Natural gas been running up again. We'll see in the futures it's been running up off of that floor in 2, might be headed up to 3. We'll see, but again, been very range bound. Gold, and we'll talk about the significant decline in gold and what may have caused that, and then the rebound in gold as well. We'll see all the futures are pointing negative. Again, the dollar strengthened, so foreign currencies against the dollar, you see that significant plummet in the euro, and treasuries bounced up pretty significantly. And you see we now again have an inversion between the 5s and the 30s, the 5s, the 10s, the 30s, and all the treasury yields were up, 1 to 2%. And again, we'll talk about what this debt ceiling deal or no deal, how that's going to potentially affect the treasuries, the dollar, and then indirectly other commodities as well. And I'll talk about that as well when we get into strategy session, more about Yellen talking about more bank consolidation and what the potential impacts of that may be as well. So let's look at each of the indices in a little more detail. The markets were actually doing quite well. We see the SPY broke out of that resistance level and then kind of rolled over. So, broke out of the resistance. Again, and I'll talk about, again, my opinions as to, some of the cause and reactions of that and what we might get in terms of reaction from this debt ceiling deal or no deal news. It hasn't quite, tested the previous high back from, mid-August. So, depending on what the news coming out is, whether looks like we're going to get a deal, if so, when, will the SPY go to try to test that previous high, or is it going to break down below that resistance point again? Look at it on the weekly. Again, now sitting above its moving average, just above that previous high. So again, positive reaction from the SPY. And that was, despite the economic data that came out this week, and we'll look at that economic data. But pretty much, the markets really wanted to rally. There's been a lot of money sitting on the sidelines. So again, these are some of my hypotheses as to why did we see these rallies. And for both those reasons, the markets have wanted to rally, and again, a lot of money sitting on the sidelines. So they pretty much ignored the data. There wasn't anything that came out really bad, and the markets wanted to rally, so they rallied. Again, I'll throw out my, none of this is financial advice. We're not financial advisors. All of this is my opinion and for education and entertainment purposes only. So again, we see the NASDAQ, had a major rally. Again, it's sitting, well above its moving average, broke above the previous high. The next high is again back from, the previous 2022, so it's got quite a bit of room to run, but again, a pretty exuberant reaction this week, so that might get stifled as the treasury yields push up. That would be logical. We'll see. Although again, I think a lot of this is a little bit of irrational exuberance. The markets just want to go up, so they're going up. So we'll look at the Dow. Dow didn't perform quite as well. We can see it kind of peaked and rolled over. It's pretty much hovering on its moving average. It's got, doji candle, pretty much indecision. And, it'll be indeterminate whether it breaks down and retests that longer term moving average, or whether it, bounces up and tries to retest that previous high, the resistance of that previous high. IWM. So again, it's getting a lot of resistance from that longer term moving average, pretty much flat, range bound. Again, Russell's quite a bit weaker. It did try to, have a little bit of a rally, got rejected off that moving average and bounced back down. So again, it's going to be a lot more vulnerable to increasing yields, increasing interest rates, and the debt ceiling discussions. The VIX really didn't respond a whole lot. We had a little bit of a pop when that initial drop on the news about the debt ceiling came out, but the futures are still, hovering below 20. The actual VIX, I believe, is sitting below 17 right now. We can look at that in Webull if we want to see the current VIX. But again, we just got a very, very short-term pop, and then it went back down pretty quickly. So there's the short-term pop, and then went to descending again. So we're not really getting the fear, the negative reaction that one would think with this possible technical default, as well as Alan pointed out, the potential issues with additional banks. The market isn't reacting with a lot of fear, and there's discussions that possibly there's too much complacency, and that may cause a significantly more negative reaction. When the realization comes that maybe we go into a default, or we'll talk about the consequences of if we get a deal. What kind of deal do we get? Tony Rosa says the market doesn't care about anything. Well, yeah, it does, but again, it wanted to go up, so they will care, right? So we'll look at the groups. Let me grab a drink, and we'll look at the groups tab in FinViz as well. Talk about groups and industries. Okay, so again, we've been talking for quite a while, and again, my continuing hypothesis is, or opinion is, sector rotation still the name of the game. Even though we saw this little run up in the markets, I still think they're generally pretty range bound, and again, we're seeing it run up against that resistance, and then the sector rotation and the mega cap techs is pretty much, in my opinion, holding the market up. And again, we saw the sector rotation on Friday, so they rotated into energy. We could see, energy had been kind of underperforming for the week and had been the most negative for the month. So again, on Friday, they rotated into energy and healthcare, out of consumer cyclicals, that in part due to the Foot Locker negative. There were several negative retail reports that came out, so that's not surprising that consumer cyclical went down, healthcare energy went up, basic materials, real estate kind of in the middle, technology was down relative to where it was in the week. So, profit taking out of technology, rotating money back into energy. Again, we can see for the week, defenses, real estate, utilities were the worst performing. So we saw real estate keeps trying to make a run and keeps meeting significant resistance. Again, we saw energy was kind of in the middle, ran up for the week. and it's been the most negative for the month. Basic materials pretty negative. And again, this week we started to see some movement up in basic materials as well. So again, I think this sector rotation is going to continue, and we'll see if real estate, if we get a run in, a better run in real estate, we might get a continuing run into energy. Oil's relatively low, and also basic materials really had gotten beaten down, so there's probably some opportunities there as well. So let's look at the individual industries. So we see oil, natural gas. Silver had been severely beaten down. We'll see that. Gold as well. It rolled over, broke down through its previous support. On Friday, we got a bounce. So we see, a lot of energy. Some REITs, diversified REITs, industrial REITs. So again, there's the residential or the real estate sectors that are attempting to rally, while there's office, retail, very negative. Uranium was down on Friday, and again, we've been talking about this sector rotation in and out of uranium, in and out of coking coal, steel. We'll talk tomorrow about how we're taking advantage again of this sector rotation in and out of uranium. See, solar was negative. There's some negative news on First Solar, and they're competitive versus China. Again, rotations in and out of aluminum. I was looking at these leisure and also travel for opportunities, but generally the stocks comprising those, I didn't see any great opportunities, but that's a big reversal in travel to be so negative. Semiconductors for the week were very positive, mostly driven by NVIDIA, I think my AMD as well. So we'll see if it keeps rallying into a resistance point and if there's an opportunity there. So again, energy generally positive for the week. And again, we see solar was very negative, gold, silver. So again, and uranium. So again, potential opportunities there for rotation back into some of the basic materials, metals, and again, commodities. See, for the month, uranium was very positive. So that just this past week was very negative. So again, I think there's an opportunity there. And we see copper, solar, silver, coal were pretty much low for the month. And again, we'll see in the futures they decline quite a bit. So again, I think there's a potential opportunity in those recoveries. So. Welcome, Clifford Mansley. Glad to see you as well. Thank you for joining us. So we'll look at the economic data from this week in investing.com and what's coming up for the next week. The only notes I had was here's a link to where Powell actually spoke at this Thomas Lobach research. That's the one that was being broadcast. There was also former Fed Chair Bernanke. I didn't really hear anything shattering out of that. They're holding to their 2% inflation target. Inflation's still too high. It was an interesting discussion, but again, I didn't hear any change in policy. They did mention that some of the credit tightening might allow them to forego some interest rate hikes, but again, they're not committing to anything. They're going to be data dependent, etc. So we see manufacturing very negative. Again, recessionary indicator. Retail was poor. So again, we saw some of the retail companies get hit, retail sectors, consumer discretionary. So retail sales was down. Then we've got Fed members speaking, so we get volatility from that. Industrial production was positive. Business inventories were down. So again, drawing down inventories is positive for company survival. Crude oil stock was way up, but again, at that time the oil price actually went up and then it came back down. So again, I don't think the oil price is really being very sensitive to these inventory numbers. Building permits were pretty resilient. So again, new home starts new homes is industry. There's a lot of demand and the only supply is in new homes. Then on Thursday, we got continuing job claims. So the initial claims was below what was expected. So normally all this data says that the job market is still very resilient. And they actually had, fewer people unemployed this week than what they expected. Normally, that would be kind of a negative for the market because that says the Fed can continue hiking rates. They don't have to worry about unemployment. But again, the market didn't react negatively to that, and it wanted to rally, so it rallied. Again, in the past, that the market would be probably reading that more negatively. So that tells you that the sentiment is the tendency right now is for the market to want to go up, kind of irregardless of the data, unless it's really really bad, which it's not. We're not getting really bad data. Natural gas storage, so it was up, but up less than expected, and again the price continued to go up. So even though it's increase in storage, but the price continued to go up. Baker Hughes rig count. So again, the number of rigs producing is going down. So that says supply is going to go down. But again, the oil price went down. So again, we're seeing prices are not really following the economic data. And we've seen this for some period of time. It's much more sentiment driven. And again, we saw how sensitive it was to the debt ceiling deal news, whether the deal looks, promising or not at a given moment. So for next week, again, Monday, we've got several Fed officials speaking, so that could provide some volatility. We've got building permits on Tuesday, new homes. So housing market, would expect more of the same. Oil inventories, etc. So again, then on Wednesday, we've got the Fed meeting minutes, so that might create some volatility if there's any indication as to, are they going to pause in June? Are they going to continue with a 25 basis point? How worried are they about the bank collapse issues? So there might, again, be some volatility coming out 2 p.m. on Wednesday due to those FOMC minutes. We've got jobless data and GDP data on Thursday, so again, normally this, would really move the markets if it comes out other than expected, but we'll see if the markets react to that or if they're just totally focused on the debt ceiling deal. And Friday, we've got some PCE data. So again, this is important input data to the Fed's decision. And again, we'll see how the market reacts to whether this data comes out as expected and we've got Michigan consumer data again. So again, we've got quite a bit of economic data the later half of the week that, normally would impact the market as to guessing what the Fed's going to do in their next meeting. Again, a reminder, their next meeting is June 13th, 14th. And also a reminder is that the following Monday is the markets are going to be closed for Memorial Day. And then we go into June, and that's where the Yellen, et cetera, is saying the cliff for the default, the debt default, if the debt ceiling's not raised early June 1st is their cliff date. And that's going to fall right as Congress is supposed to leave for their Memorial Day holiday. So again, a lot of potential volatility around this debt ceiling deal. And then we go into a long holiday weekend. and typically those cause more volatility when we come out naturally. So I'll quickly look at the earnings calendar here in investing.com. So again, you can just hit, you can see the holidays here. It's also available. You can filter by country here in investing.com too. So if you want to verify that Memorial Day is a holiday, you can do that there. We've also got that calendar on our homepage under links. You can search for holidays and find the link to the official calendar there as well. So here's the earnings calendar. Again, we'll still have some earnings coming out, although it should be winding down. Last week we got like Walmart and Foot Locker, etc. It looks like a lot of foreign companies, ADRs, etc. Ryanair, so airlines, some banks, again foreign banks. Again, it looks like it's winding down. So again, you can peruse through here and see if there's anything left to report that might potentially impact. There's a 3D printer, Nano Dimension, that might potentially impact your trading decisions, your portfolio, etc. Urban One, I think, is a retailer. Could be wrong. Might be a broadcast communication type. There's so again, should be winding down, and I'll show you a second in Webull where we can see the near-term earnings calendar as well. So now let me grab a drink and we'll jump over to the market screen in Webull. Welcome the Crow. Thank you for joining us. Glad to see you as well. Okay, so you can see the Webull offers still 12 free stocks. If you're not already using Webull, they're also offering a 5.8% APR on idle cash with their cash management. So if you're not already using Webull, as you'll see, Webull's our favorite trading platform, both for market analysis, due diligence, the majority of our trading, etc. So again, if you're not already using Webull, you can get up to 12 free stocks, and again, they're paying up to 5.8% introductory offer on idle cash. So we see where the markets ended up. Again, I'm on the market screen in the online browser version of Webull. We can see in the histogram we had 3,300 decliners, 2,700 advancers. The majority of the decliners were very small. We had, a longer tail of advancers, so that's pretty positive. We look at the inflow. So it looks like, the NASDAQ started out positive over the NYSE and then went negative, and we ended up with an actual outflow from the NASDAQ. So again, although we're seeing the indices are going up, they're being buoyed up, in my humble opinion, by the mega cap tech stocks, and actually the net flow of cash, the money flow, is out of the NASDAQ. So again, something we need to be aware of is the NASDAQ's being held up by the mega cap techs, and anything that happens to those could cause a significant decline. Again, you can see a near-term earnings calendar in this earnings tab. Just hit earnings calendar. You can also see dividends and splits, and you can see what the upcoming earnings are. So we've got PetMeds, one we've traded in the past, after market close on Monday. Mark, that's an AI play, some biotechs, etc. Nordstrom, so well, that's not that's Nordsun. So you can see, what's coming up in the very near term. Let's look at the industries for the week. Yes, we like that too, Crassy, about Webull is the level 2 data. And we've got some videos about how we use level 2 data for our trading in Webull as well. So we see some government aerospace was positive. Software is kind of mixed. IT is kind of mixed. Consumer goods, GE was positive. Some investments were positive. Investment banking, some of those are foreign. Aerospace defense. And we'll talk about the potential impact of the debt ceiling deal on the defense industry. Talked a little bit about it last week. Leisure split. Construction generally positive. Banking's been just volatile. And communications relatively positive. Semiconductors we saw had a good run. That's actually ARVR Copen. We're familiar with them. So I believe that's a small cap. Look at ETFs. And I'll look at these in more detail in a minute as well. So we've got short on mid cap, short the Russell, bear on the Russell. So small cap, mid cap bears. So shorting small cap, mid caps. Again, that reiterates the focus on mega cap tech. Short the Dow. Mid cap, shorting mid cap, small cap. Looks like up on the VIX. UVXY, that's leveraged up on the VIX. So again, they're betting up on the VIX. So that would coincide with, the expectation for increased volatility given all the issues with the debt ceiling, the banks, etc. Again, short, small cap, Russell, positive Europe, positive China. So China had been beaten down on slower reopening growth. So we've got some biotech, very positive, cancer, biotech. So positive biotech, and biotech been severely beaten down. So I think, they're trying to run up biotech because it was a sector rotation that was beaten down. Again, very sensitive to availability of credit, capital, etc. So my humble opinion, that's pretty risky. Utilities generally negative, technology negative, basic materials now positive. Again, you see uranium, wood, timber, natural gas. Cyclicals generally negative. Defensive positive. Real estate pretty negative still. So apartments, the positives are industrial, dividends, residential. Energy, again, very positive on Friday. Financial, very negative on Friday. Healthcare positive. So we saw the rotation in energy and healthcare on Friday. Commodities, cocoa, nickel, coffee, palladium had a nice run. Agricultural, we'll talk about we'll see in the future some of the agricultural plays. Coffee, softs, cotton had an interesting run. We'll see in a second. Good morning, Walter. Thank you for joining us, Walter Lyons. Glad to see you again. So the Treasury 7 to 10 positive, Asia positive, gold, Japan. We'll see the Nikkei had a run, Swiss franc, euro up. So again, they all rebounded after declining. We'll see that in a second the futures. So let's quickly look at the futures in FinViz. So again, let me know if you guys prefer the dark mode versions of these screens versus the light mode. So again, we can easily flip now in FinViz between light mode and dark mode. So let me know what you all prefer, and we'll go with that. So again, we see, the Dow is kind of lagging. It's got, more room to run. We see that, tweezer support. See, again, then my S&P broke out, had, somewhat exuberant runs. Now, going for a new longer-term high, a very exuberant run in the NASDAQ. Looks like it, both of them peaked out, given that, the debt ceiling issues on Friday. So that kind of halted the exuberant run. And we'll see again, it'll probably be based a lot on that debt ceiling deal or no deal news, whether it continues the run or if it runs over or rolls over and we see a decline. You see all the European markets, Japanese market had nice runs. In a second, I'll talk about looking at opportunities possibly to long or short some of these other foreign markets. Again, we see the Russell's been pretty flat, very barcodey. And again, a broad range and engulfing candle, so potentially pretty negative. And we see oil, after it had that initial drop, 70's been pretty much the support. Went up to about 72, but again, it looks like it's just kind of oscillating into a steady state, right now between about 70 and 75. Again, we see, natural gas had a run, bounces off a 2. 2's pretty stiff support. It's running up, towards 3. We'll see if it, makes it all the way up to 3. It broke out from its previous high. Again, I think, it could run up to 3, but I think we'll get heavy resistance at 3 and probably, bounce back down unless there's some other force driving it. Again, we saw this significant decline in gold. It made it up to 20 over, probably 2080, 2070 something, and then rolled over, went down, broke down below the 2000 mark, which was previous support, went down to about 1950 or so and bounced. So it found, support around that 1950, probably that previous low. And I suspect, it'll probably run back up. The question is it going to make a new high again, or is that going to, the previous high going to be, the top, the resistance point? Same thing with silver, broke down below that 25 support level. That was, pretty significant previous support. And it found, support around 24, bounced. And again, it was pretty good bounce there. And again, we'll see if it can break this previous, 26 level, head back up to 30. One of the rationalizations for this decline in gold that I've heard from Anthony Crudele and some others was that gold just got severely overbought. And that it got overbought, stayed overbought, and so it was a technical reaction that it declined, and that there's still plenty of demand out there from central banks, etc. People, flying to gold, silver, primarily gold, but somewhat silver for a store of value, etc. Safety trade. And so again, that was the explanations that I've heard, is that this was a technical reaction to a long standing overbought condition. So again, for those reasons, given the demand predictions that I've heard, I would expect gold and silver to swing back up, and those may afford you some significant opportunities. You can see the upside for silver at least to 26, possibly to 30. Gold could very easily go back up into those 2050, 2070 range. So we have, I'll talk about the ETFs to use to trade these various commodities in a minute. So again, I'll put my financial advice disclaimer up momentarily. So we see, commodities been very volatile. They've run up, run down. One that we've been talking about for a while is wheat. We see it looks like it's bottoming here. Also corn. We've been talking with several of the people in the chat, Easy Mike, etc. Copper. Easy Mike is mentioning copper, and again, with the slow reopening of China, a lot of people use this as a proxy for China. And you see copper kind of bottomed, and now it's pretty flat. And again, a lot of that has to do with the reopening and the slow growth in China. So again, it looks like wheat's bottoming. We're looking, and we'll talk tomorrow about how we're playing that bottom in wheat. We can look at potential plays in corn. You see it made a shooting star, so and it may have found a bottom as well. Where's cotton? Cotton had a strange run as well. I guess I don't see it offhand. I'm missing it. And we see all the treasury bonds, severe decline. Again, the yields went up, prices go down. A lot of this is, again, fear of potential default. So the risk of all the bonds has gone up. So the yields have to go up, prices come down. And again, we would expect that to continue until this debt ceiling issue is resolved. So inversely, when people are selling bonds, they have to use dollars to buy those bonds, or they're getting dollars. So we saw, dollar strength, euro, all the foreign currencies declined on that run up in the dollar, and we saw a little bit of a reversal on Friday. But again, we'll talk about how this debt ceiling deal resolution may affect the treasuries, the dollars, etc. Welcome, Flippa the Shippa. Glad to see you as well. Thank you for joining us. Okay, so another new feature in our part 1 of our weekly trading game plan is I want to try moving the ETF section, which normally we did in part 2 on Sundays, into part 1. It seems to go well with the futures discussion. We just looked at the futures charts, etc., and look for potential opportunities to play some of the indices, commodities, etc. So again, I'd love all your feedback as to whether you think the discussion of ETFs and our ETF Google Sheet is better suited for part 1 on Saturdays or in part 2 on Sundays. But again, it seemed to fit in either, and hopefully it'll help balance the time out a little bit. So I'm going to bring up our Google Sheet a second, grab a drink, and then we'll talk about some of the recent additions to our ETF spreadsheet. Okay, just a quick reminder is that our All Access and VIP Patreons have access to this Google Sheet. Contains all of our ETFs for the various indices, commodities, etc. So again, how we use this typically is as we saw opportunities in the futures chart or elsewhere. Then if we want to play a certain commodity, we talked about gold, silver, natural gas, etc., and also the various other foreign markets. Then we look for ETFs in our Google Sheet to try to play those opportunities. So we have several videos that talk about how to play the financial sector, gold and silver. So again, I won't go over those. Real estate, you can access all those videos. The real estate one's not yet released, but via this bonus link in the notes, you can hear that video on real estate ETFs. Again, gold, silver, financial sector ETFs. And then we have a whole playlist of ETF related videos as well. I want to talk about some of the additions for this week. I noticed last week Easy Mike mentioned NBDS, which is the bear leveraged ETF on NVIDIA in the live chat of last week's part 2. And thank you again, Easy Mike, for pointing that out. And so this gives you a way to short NVIDIA with some leverage, so it's a 1.25 leveraged, and the benefit to anyone trading in a retirement account like we are is we can't short individual stocks, but these individual stock related, particularly leveraged ETFs, give us a way that we can short some of these individual stocks. So I'm interested in more of these ETFs, particularly the leveraged ones that allow us to short individual stocks in retirement accounts. So I've got NBDS. I also looked up TSLS and TSLQ and TSLL. So TSLS is a bear on Tesla. It's just 1x. TSLQ, I think, might be a 1.5. Leveraged bear on Tesla. So again, gives us two different ways to potentially short Tesla. So and then there's the long 1.5. So if you wanted to get a leveraged play on Tesla without necessarily owning the shares, we've added each of these to our ETF spreadsheet, and we'll see those in a minute. Also, as we saw the Nikkei had made a big run, so I was looking for opportunities to potentially short the Nikkei, short Japan, particularly if it reaches a top. Looks like it's going to roll over. So I have found these two ETFs, EZJ to long and EWV to short Japan, the Nikkei. So we can use those ETFs. They're 2x leverage. So if you want to long or short the Nikkei, long or short Japan, we can use those. And again, I think Easy Mike, thank you. I believe you pointed those out, or one of those at some point. So thank you again for that. Similarly, we saw the DAX had run up to a new 52-week high. So I was looking for a similar ETF to be able to short the DAX, short Germany, and I found one that would long but not to short. And so I didn't add those because with it at a 52-week high, I'm not terribly interested in longing it. And I haven't found any ETF to short. So if anybody knows of an ETF to short the DAX, that would be very helpful as well. So if anyone else has any other categories you want to look at in our ETF spreadsheet right now, please throw them up in the chat. Otherwise, I'll just very quickly spin through some of them. There's Lab D, which is the short on biotech. These are cannabis. We've kind of looked at those. We've talked about China long and short using yin and yang, and you can also see some others. This is consumer discretionary. So here's several on Europe. Bull. Here's our, that's a short on Europe. I've been looking, and I'll flip over to the screener very quickly in a second and look at the technology components to see if there's any components of the technology sectors that we might want to try to short if they're overextended. Here's the ones we've added, EZJ for long Japan, EWV, so you can see the risk-reward profiles of those, and we can monitor those for potential opportunities. Again, since they're in yellow, I haven't added them to our database. We're just monitoring them in our Google Sheet, and I would have to manually update support and resistance top and bottom. And we talked about natural gas, so we've got different ways you can long short natural gas. Again, if you're a very nimble trader, great day trade, very nimble opportunities. I think it moved like 6% or something on Friday. We'll talk tomorrow about IPI and what we're looking at, opportunities in potash. Again, we've talked about all the indices. We'll look at semiconductors in a minute. We've got gold, silver. Here's utilities. And here's one on the yen. So versus the actual Japan Nikkei, if you want to trade the Forex, the foreign currency, we've got one for the yen. So again, our all access and VIP Patreons have 24/7 access to this. So you can look at it in more detail in whatever category you're looking for an ETF to trade, long, short. Again, we've got several candidates. I'll bring up the Tesla and NVIDIA ones. So here's the NVIDIA long and short. So again, you can see the opportunities there. We can see that the short one's getting very close to its 52-week low. So there may be an opportunity very soon to potentially short NVIDIA. But if you look at the charts in these, and I won't do this right now, but NVIDIA is pretty strong. It's on a upward trend. It's bouncing within a upward trend, so I'm not overly eager. And even though it's way overvalued, the exuberance behind it seems to be pretty strong. And it looks like I need to add the Tesla ones into here. Yeah, I'll have to look those up again. So I want to quickly look at the technology components. So as you can see, the Fang Yu ran up, rolled over, but it's significantly broken out, made a new high. Again, this is all mega cap techs, very strong, and they're using that as a flight to safety. So again, I'm not overly eager to short that, given the that they just keep pouring money into Microsoft and Apple, etc. We see the biotechs hit resistance and bounce down. So shorter term, if you want to short biotech with Lab D, that's potential opportunity. We saw the run up in the semiconductors, got pretty much close to that resistance level. If it hits that 1840, which is the previous top, that's where we previously been interested in shorting semiconductors with SOXS, because again, most of this is driven by NVIDIA and somewhat AMD. See the TQs broke out, so again, it's generally pretty strong. But again, there might be some opportunity if we see weakness in the NASDAQ. But again, it's being held up by the mega cap techs, mega cap techs right now. Okay, so let's talk about, how do we make money trading, whether there's a debt ceiling deal or no deal. Last week, we talked about how to make money trading while the debt ceiling is looming, and I parsed out those strategies, those trade ideas from last week's part one into a separate video, and you can access that in the link in the notes here. Also, I think I released it on Friday, so you can find it on our BeachBum Trading YouTube channel. So what are the potential impacts of whether there's a debt ceiling deal or no deal, and all this news flow? We're on again, we're off again, we're close, we're not close. We're going to continue to get that news even over this weekend, and I expect it to be just very volatile. We're on, we're off, we're making progress, we're not making progress. Again, it's all politics, and I'm not going to discuss the politics. I just want to very quickly give you some ideas, my ideas as to how can you make money trading given this current situation and this volatility around whether we're getting a debt ceiling deal or no deal. and how you can protect your capital. So again, I expect, just increased volatility due to all this news flow, all the perceptions as to, are we going to get a deal? Are we not going to get a deal? When are we going to get a deal? Is it going to be a good deal or a bad deal? And I think that's an important thing as well I wanted to talk about is even if we get a deal, make sure you listen to what that deal is because it could be a really bad deal. And I'll talk about the post 2011 deal that, in my humble opinion, uh, because they were, all this stuff, they're holding a gun to their head and they have to get a deal so they don't default. And even in 2011, they did technically default. But at the last minute, they cut a deal. But again, in my humble opinion, it was a really bad deal. So even if we get a deal, it could be a really bad deal and could have a very negative reaction, be it immediate or delayed in the markets. So some of the potential impacts if we do get a deal is that very quickly we're going to get a flood of treasury bonds if they do get a deal because the treasury is depleting its reserves, and that flood of treasury bonds going to hit the market as soon as they possibly can if and when a deal is reached. And that's going to push treasury bond yields up because it's going to flood the market. So you got a huge supply hitting the market. Bond yields are going to go up, which means prices are going to come down. So be well aware of that'll probably be a pretty dramatic move because of this flood of treasury bonds hitting. So it's also going to push up short-term borrowing rates. So it's going to exacerbate the credit crunch. It's going to drain dollars from the banking system, drain liquidity because you have to have dollars to buy treasury bonds. And if it's a foreign entity, they're going to have to exchange their currency for dollars to buy treasury bonds. And again, they'll want to buy them because the yields are going to be very high at that point. So I expect, DXY is going to go up, and that negatively impacts dollar-denominated commodities. So, when this happens very short term, it probably will have a negative impact on oil, gold, silver, etc., which are dollar-denominated commodities. At least in my humble opinion, that would be rational as to what happened. Now, is the market going to react rationally or irrationally? I can't predict that. So again, I just wanted to point out, after the post 2011 deal, in my humble opinion, this was a bad deal. We had the sequester, which essentially capped spending in defense contractors. I happen to be working with a defense contractor during that time period, and they had layoffs, they did voluntary retirements. They had to, it stifled their growth, so it either cap their budget or stifle any growth in their budget for quite some time. So it's going to have a negative impact on defense contractors, on their suppliers. So anybody that supplies them, again, this whole domino effect down the supply chain. If they can't make money, their suppliers can't make money, other government contractors can't make money. And then it may limit growth in other areas. So listen to this deal, where are they going to cut the budget or where are they going to cap the budget? Because that may stifle growth to any companies in those areas. So again, that may have a very negative impact in those areas. So be aware if you own any or are looking to get into those, are we going to get a similar cap or cuts in those areas, and how might that affect your trading, affect your portfolio? Again, I want to wrap up real quick. So we've talked about how to make money trading in May. Someone earlier, Alan, I believe, mentioned the fact that Yellen mentioned further consolidation needed in the banks. Yeah, I expect, there's further issues in the banking sector. It's going to cause, further volatility. And you can hear our previous videos on, don't get trapped in this because we're not going to hear about it probably until it happens. And we won't necessarily know who's consolidated until Monday morning we wake up and okay, a bank has a new owner, new name. So we looked at all that. Tomorrow we will talk about dividend payers, and we'll also talk about option strategies, how we can make money while we're waiting for this debt ceiling deal or no deal to get ironed out. How can we also make money while we're waiting for this to get resolved, and again, protect our capital, protect our trading capital and our money while we're waiting for this debt ceiling deal or no deal thing to get resolved. So good morning, Ricky. Thank you for joining us. Hopefully, you did hear the whole thing. Because I'm gonna wrap up now. If anyone has any further questions, please put them in the comments to this video. You can ask in our Discord. There's a free invite to our Discord. Our Discord's free to join. You can find an invite in the description box below. You can also contact us via our several other social media sites, and you can find links to all of those also in the description box below and on our beachbumtrading.com, bum without the U, website. So again, I hope this all helps. If you have any further questions, comments, etc., you can contact us via any of these ways and provide us with your feedback and any further questions you might have, and we'll try to help you as we are able. Our goal is to help you succeed in your trading career and make money trading, whether there's a debt ceiling deal or no deal. So hopefully everyone will come back again tomorrow for part 2. Same bat time, same bat channel, 10 a.m. Sunday for part 2, and we will be selecting our individual stocks, ETFs, etc., to put in our top swing trading watch list, bullpen, our shopping list, etc. And again, we'll talk about more trading ideas and strategies for making money trading, whether there's a debt ceiling deal or no deal. So I hope this all helps, and have a great day.